Hey, Jeffrey, what do you think? Go ahead, wade into this conversation. Jeffrey MacDonald is the head of fixed income.
That's a scary name.
Strategies at
we talked
Fiduciary
about that. We
Trust.
talked about that before.
Right.
That's scary. That's like
mild-mannered portfolio manager by day.
David Berkowitz.
Homicidal.
Homicidal family killer at night. Yeah, okay.
So what do you think?
I think this is a conversation really about the yield curve, not so much about the absolute level of 10-year rates. And I think when we look at, what the Fed's looking to do, I think the curve inversion spooks them or gives them a concern. So we've been 3-month bills and 10-year notes inverted since last year. 2s and 10s have floated around with this inversion. And when we look at the big drivers, as we know, the back end of the curve is generally global growth, inflation expectations, and the front end is central bank policy. So if you run a chart of 10-year U.S. Treasuries against 10-year bunds, that relationship holds up pretty good. It's pretty solid of what's driving that back end, and we all know what's happening in Europe. So I think European longer-term rates might be driving the back of the curve here, where you've still got divergent monetary policy at the ECB, which is a basket case, and last week threw a whole laundry list of easing policies back into the market. And you've still got the Fed that's really just paused and only done one cut. So I think part of the flattening anyway, and part of the inversion anyway, is the fact that the Fed's going to ease in here, but they're a little bit behind some of the other central banks. So, does the flattening, does the inversion signal we're headed for an imminent recession? I don't think so, but I think the back end probably responding to more global pressures on growth and inflation, and the front end still staying somewhat in tune with what the Federal Reserve is doing.
Would you buy treasuries here?
We are not big buyers of treasuries here. I think we're playing it a little bit from the short side, but I think, barring any kind of real aggressive, inflation or growth scare, which you'd have a hard time selling me on given what the outlook is. I think around 2.25 is probably fair value for U.S. Treasuries. And if you get a cut in September, tomorrow, when we're likely to get it, maybe another one between here and year end, now you can build a yield curve that's around 40, 50%, 2s, 10s. And that kind of feels like where we should be. We've got reasonably good trend-ish growth here in the U.S., maybe a little bit slower than trend. Inflation, depending on how you want to look at it, is kind of within or close to that symmetrical band. So, a positively sloped yield curve around 40 to 50 basis points kind of feels right. It's just going to, I think, take us a little while to get there. And then a little bit of news, a little bit of relief on trade, on stimulus, the whole fiscal question. How are we going to find capacity to do that? Any kind of relief on those fronts, and I think you get a more normalized curve between here and year end.
Jeffrey, thanks for coming in today. It's good to see you. And Steve, we'll see you in just a little bit.
And Steve, my response to you. My response to you would be the weakness that was
in the trade war.
The weakness that was manifested in Europe probably wasn't mainly due to the trade wars, that was already
we asked that. My response to you, Joe, would be
I respond for you to me.
Oh, I don't talk.
No. And you say, here's your response. You've got me there, Joe.
No, you got me there, Joe. Brilliant. No, I will tell you that we asked the question in the Fed survey.
And the trade war is hurting in Europe.
The trade war is increasingly seen as responsible for some of the global economic weakness.
By the way, Brian Grazer, when he says talk to people, he doesn't mean talk for them.
Yes. Really?
Really.
I was looking right in his eyes as I was leaning in as I was doing that.
Yes. I felt like you were communicating with me.
That's what I was trying to do.
You're doing a nice job of that.
Say hi to everybody on your way out and press the flesh. That's the way we're doing this.
I'm always pressing the flesh. Okay. I'm running.
Excellent.